Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at one of my top dividend growth companies within my financial freedom portfolio. This is a dividend stock that continues to deliver very strong results year after year. They just shared their latest quarterly earnings and actually crushed analyst expectations. I believe it's one of the strongest consumer companies in the world. They have global diverse operations and own $23 billion brands under the single company's umbrella. And the stock we're going to focus on in this episode is ticker PEP, which is Pepsi. They currently trade for $153 per share. They're up more than 13% on the 1-year chart, and they now have a market cap at over $206 billion with a dividend yield at 2.9%. And now if we take a look at my personal dividend stock portfolio that has grown to over $112,000, we can see that Pepsi is now the third largest position. I own 39 shares of the consumer giant worth just below $6,000, and it sits just behind Microsoft and Apple to round out my top three. My average cost per share is $120, which means I'm up around 26% on my current Pepsi position. This is a company I plan to hold for the long term, and I believe they will continue to deliver very strong financial results and provide me with growing passive income for many years going forward. And overall in this episode, we're going to take a look at Pepsi, go over their latest investor presentation, the company just shared their latest quarterly earnings, and take a look at their financial statements. This is one of the top dividend companies in the market right now. They're soon to become a dividend king, and we're going to do a quick overview on Pepsi. They are the third largest position within my portfolio, and they just shared some incredible results in the second quarter of 2021. So before we continue on with the analysis, I'm going to ask you to please hit that like button and subscribe. I'm the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos, and of course today we're going to focus on my favorite consumer company in ticker PEP or Pepsi. They made major headlines this week after the company reported a very strong second quarter. They crushed analyst expectations and raised their full year guidance for earnings per share. And during the past quarter, net sales grew more than 20%. 20% expansion over the prior year is absolutely incredible for a massive consumer company of this size. And overall for the quarter, revenue came in at $19.22 billion, beating the expectation set at $17.96. And earnings per share came in at $1.72, up from the expectation of $1.53. So in the top and bottom line, they absolutely crushed expectations, and I love to see revenue growth this fast and actually accelerating for a brand like Pepsi. So this is a company I expect to grow in the mid to high single digits year after year. Slow, consistent organic revenue growth is what I'm forecasting for this business over the long term. So to see a nice quarter recovering from the pandemic very well and net sales growth of 20% is very happy for me as a key Pepsi shareholder. And now we're going to jump over to the company's latest investor presentation to get an overview of their current operations. So under the PepsiCo umbrella, they own $23 billion brands. 23 different brands they own have generated over $1 billion in annual revenue within 2020. That number is absolutely phenomenal and is why I love owning Pepsi stock. When you buy into this company, you're not just buying the PepsiCo name or the soft drink that everyone associates with the brand. You're getting dozens and dozens of different companies within the snack and beverage sector, and 23 of them generate over $1 billion in annual revenue over the past year. And we can see the $23 billion brands are all household names within North America. Doritos, Gatorade, Mountain Dew, Tostitos, and many more are consumer brands we see in every grocery store all around the country. And these $23 billion brands help contribute to the over $70 billion of revenue they generated in 2020, and that number has continued to grow over the past trailing 12 months, with over $10 billion in operating profit. Their products are sold in more than 200 countries and territories all around the world, and they have more than 300,000 employees as of the latest quarter. So overall, Pepsi is a massive, massive company. They own so many different brands, and that's why I love owning them as a key holding within my portfolio. A lot of companies in the world right now do one or two things very well, and that's pretty much it. Pepsi continues to expand their product mix by more and more different brands, and overall, this number, I believe, will continue to grow for long into the future. And if we take a look at their revenue breakdown, this is a number that shocks many investors. When you think of Pepsi, you think of the beverage company, and that's what you think they do. Some people understand they own some snack foods, but they don't really know how much of their business is actually associated with those major snack brands. And we can see in terms of revenue balance, snacks are actually the leading category, making up 55% of the total revenue, and they're the number one position within that sector. If we take a look at 45% of the revenue, that's their beverages. So the actual Pepsi and all their other drink brands make up only 45% of the total top line, so less than half. So right away, when you think of Pepsi, many people directly associate with soft drinks, but really, that's the smaller portion of their business behind the different snack food options. And right away, we know they're the strong number 2 within that market, just behind Coca-Cola. And if we take a look at the company's geographic revenue breakdown, 62% of the total revenue is coming from the United States and Canada, and the remaining 38% is from international markets. And the top international markets include Mexico, Russia, the United Kingdom, China, and South Africa, and those 5 combined add up to around 17% of the company's total revenue. So they do a nice job of generating global sales across their different snack and beverage options. And if we take a look over the long term, they are forecasting long-term organic revenue growth between 4 and 6% per year. So like I mentioned at the beginning of the video, mid-single digit expected growth rate coming from this Pepsi company organically. And we can see over the past 7 years, they've been hitting these metrics. Organic revenue growth does not take into consideration any foreign currencies or any acquisition the company makes in order to expand their top line. So organically, they're expecting their product base that they already own to grow between 4 and 6% per year, which I do expect. And I think over the longer term, they will continue to acquire other businesses that will help bump up the total top line growth into high single digits or low double digits on an annualized basis. And if we take a look as of late, Pepsi has shifted their business model and they become a massive acquirer of other companies since 2018. So if we take a look from 2013 through 2017, they only invested $500 million in buying other companies. But then over a 3-year span from 2018 through 2020, they then acquired $10.5 billion worth of different brands and added them to the PepsiCo umbrella. So of course, a company who has to make other acquisitions in order to grow, that usually is a red flag, and I have that in the back of my mind when analyzing Pepsi. But within the consumer sector, it's going to be harder and harder for this company to continue to grow their current product mix, although they are growing organically. Like we saw, they're only forecasting 4 to 6% per year. So in order to grow faster than that, I understand why Pepsi has begun making major acquisitions and invested over $10 billion buying the brands you see here. They purchased SodaStream, Rockstar Energy, Bear, Muscle Milk Protein, and a few other big brands in order to help grow their current product mix and generate growing revenue for long into the future. And with Pepsi, they're trying to acquire companies in the segments of the consumer market they're not already strong in. So they bought an energy drink, SodaStream, a protein company. They're trying to get into the different markets that they don't already control with their current mix, and I think they're doing a great job of which brands they're choosing to invest in and add to the Pepsi portfolio. And if we take a look, over the long term, they're still forecasting that the global market for both beverages and snack foods is going to grow between 4 and 5% every year for the next 5 years. And Pepsi still owns a very small percentage of that global market, so it does give them a lot of room to buy other competitors, to continue to outweigh the cons, and continue to perform very well for long into the future. And even if they only gain 1%, 0.5% more of this global market share, it would lead to major positive benefits for the company's total top and bottom line. And if we take a look next, they believe they can create value for their shareholders over the long term through their organic revenue growth of 4 to 6% per year, their operating margin expansion year after year, and consistent earnings per share growth in the high single digits, and overall those combined, plus a current dividend yield right around 3%, they believe they can create a ton of value for their investors for many years going forward. And of course, with Pepsi, many people associated with them as one of the strong dividend growth companies in the world, and they're very close to becoming a dividend king. They've been growing their dividend for 49 consecutive years. 49 straight years, they have come out with a dividend payment and have not missed a single cash payout to their investors. So that means through every global recession and depression we've been through over the past half century, not only have they paid out their dividend, but they've continued to grow it through some of the toughest economic times in history. And if we take a look, their CAGR over the past 7 years sits at around 9%. So for a massive company like Pepsi, you're still getting some nice dividend growth year after year. And if we take a look at the dividend scorecard, right now the yield does come in at around 2.9%. Their payout ratio is somewhat high, but also at a manageable level at 70% of their net income. I would like to see them get that down to around 60 to 65%. Their 5-year dividend CAGR sits at 7.7%. And like we saw, 49 consecutive years of dividend growth, which is absolutely incredible. And even with such a long dividend history, their current payout is considered very safe, coming in at a 93, so it's very, very unlikely we see Pepsi cut their dividend anytime soon. And now, of course, if we jump over to their financial statements, we'll start off with the income statement, and we can see over the past 5 years, from 2016 through the trailing 12 months, total revenue continues to grow year after year. Nothing drastic, but the top line continues to expand. And if a company continues to grow their revenue, it means their operations are growing, they're reaching a greater audience, and they have the ability to raise prices in order to keep market control as well. And we can see right here, 62.8 billion of total revenue back in 2016, 63.5, 64.6, and continuously has grown to over 71.3 billion during the trailing 12 months. So overall, Pepsi is still a business expanding, which is a great sign. And if we take a look at their bottom line, net income is always pretty consistent between $4 and $8 billion per year, which is great to see as well. And net income, don't focus on it too much. You want profitable companies, you want earnings per share growth, but because of this brand, they have different expenses year after year, which kind of makes net income fluctuate. But as long as profitability continues to grow, we're in a good sign. And we can see overall, the one downside with Pepsi is the balance sheet. The balance sheet is definitely not the strongest, and I keep that in mind when evaluating my Pepsi position and how large I have it within my current dividend portfolio. Over the next few years, I don't believe Pepsi will have any issues with the balance sheet whatsoever, but they will have to start doing a little bit of debt repayment over the longer term in order to improve their financial position. So we can see right now they have around $6.6 billion worth of cash. On their total assets, it looks like they have a lot with over $91 billion, but because of their different acquisitions over time, close to $39 billion of that is made up of goodwill or other intangibles, which are non-cash assets. These are assets they cannot sell for cash, so personally I like to take them out when evaluating a company's total assets, so right away that would bring them down to around $50 billion on estimate. So that's not the best sign. That is a lot of non-cash assets sitting on the balance sheet that kind of make this 91 billion look a little inflated. And why I have a little bit of concern with the balance sheet is the amount of debt on the business. Total current liabilities at around 22 billion, not too concerned with that number, but overall long-term debt at around $39 billion is pretty high to be at that current level. And I would like to see them bring that down to maybe 20 to 25 over the next few years as well. So I don't think the company is going to be in any financial hardship whatsoever. They have pretty much unlimited capital available to them. They're a nicely high profitable business. Their payout ratio allows for 30% of net income and cash flow retention to actually use to be paid down debt. So I don't think they're in that much of a dire financial position right now. But overall, I would like to see the company pay down debt and improve their overall financial position over the next few years. When evaluating a company, you can't just say the good, you have to say the bad. And for me right now, the balance sheet, even though I usually only invest in perfect balance sheet companies that have very strong operations, Pepsi is a brand that I think over the short term will be okay, but definitely has some work to do to create a stronger balance sheet over the long term. And finally, to kind of wrap up the analysis, we have to take a look at some future growth expectations coming from Wall Street analysts. And if we take a look over the next 5 years, they're expecting Pepsi to continue to grow at 9% annually, which is a pretty good sign. And from their current level, the company's stock price sits at $153, which is only slightly below the 12-month expectation of $156, and they are considered a light buy right now, coming in at a 2.3. So Pepsi, like we've gone through this entire video, is one of the strongest consumer companies in the world. They're one of the top holdings in my personal portfolio, and this is a brand I have no intention of selling anytime soon. And now I'm going to wrap up the video by saying thank you for watching. Please hit that like button and subscribe if you already haven't done so. Join the community, and I will see you in tomorrow's episode.